Never stop, I'll get it if I want it. Gotta make to myself a promise. I won't quit, keep going till I got it. I won't give up till I'm on top.
Yo, no, I ain't the type to give up. If I do something, man, I do it till I get what I want. I turn a business out of nothing into something I love. I got a poker face, but honestly, I'm not one to bluff. I flip a switch, never miss, man, I always stay up. Don't let them see you, bitch, always have a plan to stay tough. This life ahead of you ain't easy, it was built to be rough. But that's what makes a personality, is tragedy, bruh. So keep your head on your shoulders. Now we ain't out here moving rocks, we out here moving boulders. Now we ain't getting posterized, we out here making posters. And we ain't got nothing to hide, we move forward like soldiers. You better wake up for the pay stub, or you'll pay up. Don't make love to the game, bruh, fuck the game up. Change up, rearrange stuff to your greatness. Same us for the way up, play the game, bruh.
Never stop, I'll get it if I want it. Gotta make to myself a promise. I won't quit, keep going till I got it. I won't give up till I'm on top, yeah.
You know I'm always honest, there ain't no way I'm ever stopping.
I won't quit, keep going till I got it. I won't give up till I'm on top,
I'm always
yeah.
learning.
What is good, family? It's your boy, Reckless Ray Dinero, and we back at it again with another episode of Future Financial Strategies. I'll hide this real quick. I gave you guys a sneak peek. First of all, I have survived. I've survived illness, got my NASA polo on, I got the guns back out, boom. You know what I'm saying? Sometimes you got to flex on them. You got to flex on them. You got to let them know. Unlike most of you, I do get out and touch grass. And by most of you, I mean like the competition, because obviously the Dinero dogs, we getting out and touching grass. But you know, you got to let them know that sometimes you're ready, so you don't have to get ready. I'm ready. Been a pretty hectic week. Pretty hectic weekend. I got sick. I forgot that I had. So I forgot that I hadn't been taking my vitamin C. I'd been really going down the rabbit hole on some of my other supplements, and I forgot to reorder my vitamin C for like probably a month and a half. And I got sick. And then I had an allergic reaction to something on top of being sick. It's been hectic. It's been hectic. Yesterday, when I was over on Black Man Unfiltered Network, I had to come in. My good crispy camera setup did not work. That was annoying. So I had to go back old school. It was an old school setup. You know, redundancy and all, but it made me kind of sad. And now that I'm looking at this setup, I'm like, man, I'm getting ready to sell off a camera, but I'm really kind of tempted to just upgrade the computer setup because I really like this camera angle. I'm looking at it right now and I'm like, man, I feel good and I look good. And, you know, I had a couple of days where I hadn't looked good because part of the allergic reaction was on my face. That wasn't fun. Didn't like it. Did not like. I just did extra push-ups because I've been medium ugly for forever, and I'm rocking with it. Shout outs to Sugar Bum. And she told me I was ugly, and I ate that. I took the L. You know what I'm saying? I got the assignment. Everything else is great, though. But we're feeling good. We're getting back through it. I got a couple of updates before we jump into the reaction. Obviously, we got approved for our city brokerage, so we've started putting money in there. I'm currently sitting at 80% ETFs, 20% cash. That reason being is the part of my savings that I moved over there because I hit the metrics to move my savings over because my checkings and my savings, they lined up appropriately, finally. And I don't like sitting on a lot of cash. So we had to trim that down. So part of that we're saving in the market is in the ETF VOO. That is the Vanguard, basically the S&P 500. Great place to have it sit. Gets a little bit of dividend off of it. Tracks the market. I'm good with that. I'd rather have it in the market than sitting in cash, guaranteed losing value, because one of our staples of the financial red pill, cash is trash. It will always be trash. Fiat currency is trash by nature. It's trash by design. It doesn't go up in value. Assets go up in value. Cash never goes up in value. It actually goes the opposite direction. It goes down in value year over year without fail. And no society that has a central banking system has cash gone up in value. That is a stone cold fact. Google it. There's not one. Matter of fact, all of the monetary systems that have failed have been because of the involvement of a government or a central banking entity on the market instead of allowing the market to heal. Also a fact. It's just what it is. We try to mess with things, we screw things up. The market can fix itself. The market is a self-healing organism. But with that said, I'm not worried about the bank. I am worried about the brokerage. The other one that I put money in, I'm going to go ahead and share this tab instead. And we'll get this back onto the stream. And we'll make it big. Put me down in the corner. I mean, I don't even need to be on the screen for this. I just need to talk to you. So the other position that I'm starting, which is going to be the beginning of the foundational position of the portfolio. Like I said, I want to get paid. I want to get paid all the time. I want to get paid every month. I want to get paid as much as possible. So when I'm building out this portfolio, the portfolio that I'm building over here, hope you guys like the active logo up at the top. For those of you with ADD, you're probably getting destroyed this whole video. I'm sorry in advance. But I thought it was pretty cool. You know, I have like the sedentary one, and then I got this one where it's just banging, and it's just banging the whole episode. And I want you guys to know it's me down here. So definitely make sure to like, share, and subscribe, because we're not trying to get rich over here by ourselves. And as we're building, we need some more dogs to get into the dog pack. We need a lot more dogs. The dogs we're growing. We are definitely growing. Oh, actually, good God, I got so much stuff I need to do, but I want to make sure to get this done. So hold on, because this is important, because my subscribers, my Dinero dog pound, the dog pack, are important to me. And we've added 19 people in the last 28 days. Can you guys believe that? 19 people in the last 28 days? Good God, that's a lot of people. Good God. We added people this month. Oh, Lord. Okay, hold up. So this is going to be the shout outs for May. Like we gotta just start with May. So first of all, we're going to give a shout out to Evolved CA. Thank you for joining the dog pack. I hope you're getting some value out of this. Definitely. I mean, I don't know if you guys have noticed, but I do respond to every comment, every single one. I go through and check them. It's actually a thing of mine, and it's one of the things that I stand on is I'm very reachable. I am very involved with the community that we are building over here. I do view this as a community. I don't like groups of people, but I'm a fan of communities. I like them. And this is a community, and I think it's a very important one. It's very important that we show support for each other. I appreciate those of you who are coming over and seeking value. And if there's any way that I can continue to add more value, let me know. Interact with me in the comments. Don't be sneaking in on me. I can't believe I got this many people over here. We're growing. It's dope. And we want to keep the growth going. So like if you're getting value out of this, share it with somebody. I'd appreciate it. Mandrell 211. Now this dude, Mandrell, props to you. Thank you for subscribing. I didn't know you were lurking around my page. Now I gotta definitely stay on point now, because Mandrell is a very smart man. He definitely pushes, definitely challenges me. I always enjoy being on a panel with this dude. He's a great person. And yeah, ladies, he's single and jacked. Just saying. Holla at your boy. All right. And then let's go through Mayo Monkey. Me and Mayo have been cool for a long time. Props to Mayo Monkey. Shout outs to Mayo Monkey. I appreciate that brother as well. He is definitely one to stay on everybody's necks and hold us accountable. Always appreciate his insight. Da Vinci Ford de Clever. Shout outs to you. Thank you for joining the dog pack. Alexis from Texas. Shout out to you, Alexis. Thank you for joining the dog pack. Daryl Long, my brother. You already know what it is. I appreciate you. How am I not? What the heck? Daryl, you got so many new channels, bruh. So many. I can't keep. You got to just start sending me texts when you get taken down and make a new channel. Like, that's just the new rule. I need a text all the time. Kai's Custom Designs. Shout outs to you. Thank you for subscribing. Uncle Tom's wife, dope woman. Definitely a solid, strong nuclear family. They've reproduced. They have great kids. They're both smart, both insightful. Appreciate both of you. Shout outs to y'all. Thank you so much. Damn the luck and damn the luck. Shout outs to you. Thank you for joining the pack. Rich the Beer Guzzler. Dope name, first of all. I like it. Thank you for joining the dog pack. Also, Telling Stewart of Mulatto Preservation LLC. Thank you for joining the dog pack. We go back and forth. You know what? You are one of the most active commenters ever. I got Murder 100. I got all my regulars that show up for Guns and Butter to be in the chat live with me. But Telling Stewart Mulatto Preservation LLC, you be going hard in the chats on my videos, and I appreciate that so much. And I mean, definitely point of reference. I respond to all my messages in my chat. If you hit me up in the chat, should let you know. I'll respond. We have whole conversations in there. It's wonderful. Appreciate you. Welcome to the pack. Okay, so that's all the new May entries. Now, those of you who joined in June, I think what I'm going to do is I'm going to probably do a mid-June shout out for the new subscribers, and then I'm going to do an end of June shout out, and I think the cutoff date's going to be the 15th. Let me see here. Yeah, the 15th will be perfect because that's actually a Thursday. So that's when this will, this goes up on Thursday. It might be recorded before Thursday. But we'll do up to wherever when I record it. And then yeah, we're going to do it in two halves because I don't want you guys to think that I don't appreciate the hell out of every last one of you that joins and watches my videos. So, okay, so we did that. Okay, so now back to the QYL. Okay, I got to get my words together. QYLD. This is a stock, an ETF that tracks covered calls. Gets you a little bit of exposure. It makes a little bit of money. So far, the volatility hasn't been that bad. Obviously, it's one of the more risky plays, but I'm using it as a foundation. And so for me, what that means is there are stocks you buy, and then you take the dividend that you get from those stocks once it gets to a certain level, and you pour that in to the next position. But you keep so like I don't use the drip function on my portfolios unless they're done, and I haven't had a done portfolio since I liquidated everything to go into crypto. But that is my methodology when I'm doing these, when I build out a portfolio. So like this is an income focused portfolio. This is a good income play. The next play behind this one is also a really good income play. We're going to be trying to cover both sides of the market, and then we're going to get some businesses in. I don't build big portfolios. I will have a max for the income portion of this portfolio. Now, what we do after that, there's going to be a portfolio after this portfolio, but I'm looking at like basically 5 positions that are going to be income positions. And I think that it will be a scaling level of complexity. But like, you're looking, I'd say between 5 and 7, let's be honest. You always add a couple in there. I always say 5 and then it ends up being 7, but it's not going to be 10. I don't believe in having a lot of positions per portfolio. So the income portion of this portfolio will be 5, comfortably 7 positions, depending on how I'm feeling and how the money rolls in. And that's just what we're doing. So we're rocking out. So that was the update. Like we're making moves forward. Like obviously that's going to be an arduous journey because stocks are slow and boring, but we got to do what we got to do. We got to get to this bag, and we got to set up a secure foundation for the future. And so we're going to do those things. Now, on to the reaction. Now, what we're reacting to is Jaspreet Singh's, and he is at Minority Mindset. Great channel, very insightful. I don't agree with him on everything, but like obviously I don't agree with anybody on everything. He's kind of got that. He's got the guru vibe, but he doesn't say guru things or try to be a guru. So like I respect that. He definitely has guru vibes. But he basically surmised this so good. I was going to do my own summation of it, but he pulled out the key points, which are the same key points that I had, and he has his breakdown of it. And I think it'll be good to juxtapose to see how I'm stacking up with some of the, obviously his channel's in order of magnitude bigger than mine. And I like to kind of contrast and compare how I feel about some of these topics with what the goats are saying, because like I don't know that it's going to be an agreement, because this is diametric, like a lot of the things. Because like as much of I used to be a big Buffett head back when I was originally setting up my portfolios, and I mean a lot of my mindset for the traditional finance space aligns with a lot of stuff Buffett says. The issue that I have is when these guys who are rich beyond belief that can't fail poo-poo on anything that's new because like they don't have to learn it or it doesn't affect them. And it's not about efficiency. It's not about math. It's just, I don't like it because I don't get it. And I'm like, understand, but give the context. Like, you rich, you can't fail. Like, you gonna die rich if you did nothing else, period. Like, if you just sat on that money, you're good that you've made. So like, this doesn't affect you the same. But his thought process, I think it's interesting because I'm very much a futurist. I am very much market efficiency person. And it's funny to see how these people that have made it to the tops of these old systems look to retain and look to spread the gospel to help retain what they've made. And I think it's interesting, especially when you're like almost on your way out of this existence as well. It's another thing that's like very odd to me. I'm like, how do you hate everything that's new when you about gone anyway? Like, what are you trying to keep this up for? Like, you got like what, 20, maybe 30 years left, bro? It's almost over. And like, you got plenty of money for 20, 30 years, especially since you're not like you're giving all of it away, most of it. So, you know, like the status quo, like I'm like, man, that's really weird. It makes me put on my tinfoil, this is an agenda hat. But let's jump into it. Obviously, I did not hit the like, but I am subscribed to the channel. If I'm reacting, I'm liking it, even if I hate you. Jaspreet, I love you, but I do react to some people that I don't like, but I'll still like the video to let them know that I stopped by to be on their neck. Because that's how we do. But anyways, let's jump into this, guys. Let's go. All right. Oh, oops. All right, here we go.
Warren Buffett, in his most recent annual shareholder meeting, talked about 5 key points. He talked about number 1, that cash is no longer trash right
Disagree.
now. He said that 2, that the banking system is safe. Number 3, that there's
Disagree.
going to be a big opportunity coming for you to invest your money. Number 4, that there's no other reserve currency like the United States dollar.
Definitely disagree.
And number 5, he talked about artificial intelligence. And let me start by talking about number 1, which is cash is not trash. Warren Buffett and his entity Berkshire Hathaway are sitting on their largest cash pile ever, with around $100 billion worth of cash.
Now, I hold on. Before we even start with this, with the cash is not trash thing, this is an interesting thing that the very wealthy get to do, and he's going to point it out. Actually, let's just get to that part. I'll add the context when we get to it.
Now, he's been criticized a lot over the last number of years for sitting on all this cash, especially through all of this inflation. And now what he's talking about when he says cash is not trash is that he finally has the ability to earn some interest on his cash. And the way that he is doing that is by keeping this cash in treasury notes, treasury bonds, treasury bills, where he earns some return on this cash. Now,
which, when you're in states of high inflation, you actually get a really decent dividend on your T-bills, on your bonds. That's actually how I'm saving my opportunity fund right now. We went over this in previous videos. It's saved in the TIPS bond ETF, which is a collection of bonds. Pays out a dividend. Also, as inflation goes up, generally speaking, that ETF goes up in value because bonds become a better deal. He's also going to speak about saving in cash and high interest savings. There's no such thing as a high interest saving, because if they're giving you 3.5% to 5%, they're getting double that. loaning your money out to get you to save your money. Also, they only have to keep 1/10 of your money physically at the bank because of fractional reserve banking. Also, 3.5% to 5% is not beating inflation. So you're just going broke slow. So like you're still losing money. You're just not losing money as fast, which is cool. But like realistically, if you got $130 billion, those numbers, I mean, this all scales. Like if you're losing money slow with like $100,000, like that's not fun. If you're losing 10% a year, let's get out our little coagulation device here. We're going $100,000. That's not $100,000. That's $100,000 times 0.1, 10%. That's $10,000 a year in buying power you're losing. I mean, this scales. So like if inflation's 15%, which it's actually higher than that, and you got $100,000 in cash sitting in the bank, and you're getting 5%, you're losing $10,000 a year in buying power. You can buy $10,000 less stuff next year. That doesn't sound good. And if you've got $100,000 cash in the bank that you've managed to save up, then $10,000 probably actually matters to you. So that's the reason I don't keep high cash balances, like right there, because it doesn't beat inflation. So you're just going broke slowly. Let's get back to it. What you got for us, Jasper?
Now, what does that mean for you? Well, if you have excess cash sitting around, you can finally generate some sort of interest. How can you get this interest? Well, again, you can lend some of this money to the government through treasuries. This is what Warren Buffett is doing. And you can also consider,
again, way better than just sitting in cash.
Investing some of this money, or not investing, but saving some of this money into a high interest savings accounts, which are now paying somewhere between 3.5% to 5% in interest on your savings. And again, you want to make sure that if you are putting your money into a high interest savings account, that you're doing the research on which bank you're keeping your money in.
That's the other thing. And I mean, he subtly throws this in here. Like the bank's not necessarily safe. Like also you're going broke slowly, but also the bank could collapse. I'm just saying, like we've had 0 Bitcoin collapses. Like Bitcoin's never collapsed. It's never gone away. The volatility is there 100%. But the math, now when you do the math, we are on a stark upward trend. And I mean, I guess if you break it down to individual windows of time, that's one thing. But yeah, doing the math, it's pretty straightforward on what that is. So yeah, like the bank, you got to do research now to figure out which bank to put your money in to get your 3.5% to 5%. That doesn't sound fun at all. I'd rather just buy the ETF in the market because the market's not collapsing. Yeah. Carrying on.
That is FDIC insured and that is a reputable bank. That's what you have to make sure of, because FDIC insurance only protects you up to so much. And you never know what the government is going to say if we see more bank failure. So just protect yourself and make sure that you're keeping your money into a reputable bank. But at this time, with interest rates rising, you can get higher returns on your cash, which is where now Warren Buffett is saying, hey, I can get a pretty decent return on this cash as I wait for a good opportunity. And I'm going to talk about his opportunities are coming in just a second. The second thing that he highlighted is that the banking system is safe. Now, we have been...
Yeah, I couldn't disagree more. Like we've had so many. We had banks. UMB, I know that bank. Bank of America, I also know that bank. Both of those got downgraded on Moody's because the banking industry is not safe. And those are real normal banks. Like those banks are like local regional banks. They're not doing risky investments. They're the very tame, boring banks. You don't hear about them moving and shaking. They're just banks. And they got downgraded by Moody's. Not safe. I mean, what was it? What G-Easy? G-Easy used to say, it ain't safe. It ain't safe. It ain't safe. The banks ain't safe. Like, unless you're in the top 5. That's the reason I tell people, get into private banking. So that way you're not just sitting on a bunch of cash worried about your banking collapse. You'll at least be ahead. You'll be the people who get their money out, because you get to be a person. Also, top 5. Like, that's the reason I'm pursuing that with Citibank, because Citibank will be a bank that is acquiring other banks just like JP Morgan Chase. Same thing. All right, let's keep it rolling.
We have been covering what's been going on in the banking sector. It started off with Silicon Valley Bank. We saw it now recently with First Republic Bank. There's been a lot of craziness in the banking sector, and it's still not done. There's a lot of issues with regional banks. Regional banks kind of got a big check or a big, I don't want to say bailout, but a big raft, a big life jacket.
The Federal Reserve Board announces it will make available additional funding to help eligible depository institutions to help assure banks have the ability to meet needs of their depositors. Just going to let you guys know, spoiler alert, we're paying for that. We're paying for that via a wonderful tax known as inflation, because as they make more money, your buying power goes down. And every single one of us has to pay this tax. We have no choice but to pay it, because we have to pay for things. And if they make this money, as they generate more money, as the Fed said, because the Fed doesn't have money either. They are broke. They are broke. The only money the Fed makes is the interest payments that the American citizens pay via the imaginary tax. Well, it's not even an imaginary tax. We actually pay that shit via inflation. And this is globally. If you're in a first world country, you're all the money that we're sending all over the place when they're bringing these up and they're the lender of last resort, we're the ones who pay that. The only money they make is the interest payments that our country pays back. And we pay that also. We also pay a tax on top of that. So we all contribute back into this, your Fed taxes. That's like we're paying to bail out banks that did bad stuff with the money that we gave them. And then we get to pay for it. And then we don't get anything back. Because like the money that they take from us via the global inflation tax, the tax known as inflation, the money that they take from us, we don't get any interest back on that. You notice that when the government loaned all the banks in 2008, that money back to save the market because we couldn't let the market fail and fix itself. We couldn't let the people face the consequences of their bad financial decisions, but they took all the houses from the people, but the banks lost nothing. We paid for that too. And when I don't know that the banks ever paid that money back, we're issuing loans that are just never paid back. And nobody talks about it because technically speaking, if the government's collecting interest from the banks now, we should be getting a share of that as the people who were extracted the money from. Like we paid for that too, but we're not getting anything. Seems like there's a very big Ponzi scheme going on with the financial system, both here nationally, in your city locally, and globally, where there's a bunch of money flowing around, and the only people who actually pay anything is us. And I've got a problem with that. I don't like it. And that's the reason we're over here at Future Financial Strategies working on ways to fight against this by setting up economies within our own homes, becoming self-sufficient, being able to utilize the system without being extorted by the system. This isn't necessarily a defensive play, but we got to have a good, our defense is a great freaking offense. That's what we're doing over here. We're figuring out, we're finding ways to either pull money back to where we can borrow from ourselves and use that system to generate wealth just like the banks do. Because like if everybody's generating imaginary money, then we need to be generating imaginary money too. And then paying them back with imaginary money. And we just pay for our stuff with our money that we're getting from labor. Like we've got to start making some shifts. We've got to start stacking assets. We got to start building things that pay us. We've got to start building things. But we got to get in a different boat. The boat that we're in sucks. It's not a good boat. But let's go.
From the Federal Reserve Bank, I'm not very good with these analogies, but the Federal Reserve Bank essentially opened up a huge lending program for regional banks that they could borrow billions and billions of dollars. All this debt is going to weigh in on their costs because there are outflows of cash from these banks because people to what they feel are safer banks. So that means all these new loans from the Federal Reserve Bank. But this is where Warren Buffett says that the banking system is safe and not failures are going to slow down. That's not what he's talking about. What he says is that with the promises by the government, your money is safe in the bank. And he wanted to emphasize that because, I mean, it's a crucial part of our
But why would you? My question is this, and this is just for the Dinero dogs. Those of you who are coming in, if you want to join the pack, you'll understand. But why would you keep your money in a space where you're just going broke slow? Like, that doesn't even make sense. It's not efficient. It doesn't make sense. Like, the bank doesn't even do that. They're loaning your money out. Like, money that's sitting is dead. It's called capital flow for a reason. The capital's supposed to be moving. It's supposed to be doing something. It's supposed to be going places. It's supposed to be in a vehicle where it's kicking off more money, where it's replicating itself. The bank is the worst place to do that.
our economic system. If people don't feel safe saving their money in the bank, our entire economic system is going to implode. So I mean, it's very important for the government.
Which is interesting that if you do what the bank does, the economic system implodes. Think about that. If you're actually out here generating wealth, using debt in the way that the rich and the financial institutions do, this doesn't work. And that's the reason I'm telling you, I'm not here for everybody. I'm here for the people that are trying to figure this out. That's interesting. I mean, obviously, not everybody's going to have the wherewithal or the want to do this. They want us working, almost miserable, just barely above broke, tired, not talking, not thinking. So they've actually succeeded at pulling this facade off on most people. But for those of us in the dog pound, in the Dinero dog pack, if you would, we're gonna go ahead and just be the divergence. We're gonna be the anomalies. We're gonna be the ones who do something different, get a different result. We're gonna be the ones that make it.
To make sure people feel safe keeping their money in the bank, because without depositors protected or won't be protected the same about the shareholders of the banks. Briefs, which is why if you have not joined Market Brief, up to date when it's happening, easy to read, email. The third thing that Warren Buffett talked about is that opportunity is coming. This is why he's been so adamant on accumulating this big cash pile, because he believes that we're going to see great opportunity to invest money, aka distressed assets, aka falling investment prices, which will create good opportunity for him to buy. Now, what's funny is when he was asked what creates this opportunity, what he said was that it is other people doing dumb things.
It's going to be the Fed successfully making 2.5 million of you not have jobs. That's the crux of the situation. The Fed still wants you guys not working because all they care about is their inflation number, this arbitrary number that they deal with. And you guys are still buying too much stuff. You guys are still too employed. You guys are still doing way too well. And the Fed don't like that. They need 2.5 million of you jobless. I don't know who that's going to be. Could be me. But I'm going to go get like 3 more jobs if I come jobless. Like, I ain't worried about it. I'm going to go to work. Your boy's going to eat. The dog succeeds 80% of the time, 70 to 80%. We got a high success rate. I'm not just going to lay down and take it. I'm going to go take somebody else's job. But I'm willing to bet that a bunch of people are playing loose. There probably are people doing dumb things. But the gist of it is, once that unemployment starts kicking up and people actually start losing jobs, it's a wrap. That's going to be the opportunity, because everything's going to drop. Like, people are going to be scared. People are going to panic. People are probably going to buy a bunch of toilet paper for whatever reason. I don't understand why, if you lose your job, you got to have a bunch of toilet paper. I would buy Kleenexes if you were going to cry. But, maybe some people use the toilet paper, they wrap their arm up, and then they just do like this to get rid of the tears. So that's a possibility. Let's keep it rolling.
when other people do dumb things, it creates opportunities. What are these dumb things? Well, it could be people over leveraging to buy investments like stocks
Boop.
that they don't
There
understand. And then if that stock price goes down, they'd be forced to sell a lot, because now not only did they lose out on their investment, but they also lost the debt, which then can force inflation. And the second thing that he did highlight, though, was commercial real estate for this instance. Now, I've been kind of hinting and talking about commercial real estate quite a few times now, but the commercial real estate market is going through a huge shakeup.
Commercial real estate market is, bro, this breakdown, y'all need to pay attention. He's about to drop some jewels, but like, it's about to get bad. Like, bad. Horribly bad. There's a reason that they're forcing everybody to come back to work. Like, it's about to get terrible. Like, it's not going to be good. But he's gonna give the context on this one. I'm not gonna give the context because he has a very succinct way of saying what I've already said in episodes prior.
For a couple reasons. Number one, about half of the almost $3 trillion with the commercial real estate loans are set to readjust in the next 24 months. And when I say readjust, that means the interest rate will readjust. Why? Because commercial real estate loans are not 30-year fixed rate mortgages. So we're going to have $1 trillion+ with the commercial real estate loans that are going to readjust in the coming 24 months.
$1 trillion+. And a lot of these dudes are now upside down. It's about to be a bloodbath out here in these streets. Like, the tide is going out for these commercial real estate guys, and it's not going to be good.
Well, interest rates now are significantly higher than where interest rates were 24 months ago. So now when you're a landlord sitting on a commercial property and interest rates are significantly higher and your loans readjust because they have to, it's not a 30-year fixed rate mortgage, it readjusts. Now the bank's going to come back to you and they're going to increase the heck out of your monthly payment. Now, if you own an apartment complex that's 100% full, okay, not too big of a deal. You got to raise the price of your rents and, you can get by with the higher payments. But what if you are an office landlord sitting on a building that's half vacant and now your expenses doubled? Now you can start to see where the big problem is, because we still have a lot of office landlords that are sitting on these vacant properties. And now if your expenses start to shoot up because your debt costs are rising, that's going to put a lot of pressure on landlords to either A, get more higher paying tenants into the property, or B, get rid of the property as fast as possible. And if we start to see more liquidations of properties, that means more inventory hitting the market. If we start to see that could pull the price of commercial real estate lower. So that's kind of the concerns that Warren Buffett even highlighted. And we've seen a lot of banks and institutions highlight their concerns about the commercial real estate market. But we're going to see the real impacts of this in the coming years. So that's something you might want to keep an eye on, especially if you're a real estate investor. Number 4, when it came to the topic of the dollar and the concerns about the dollar and inflation and countries around the world trying to distance themselves from the dollar, what Warren Buffett emphasized, which is very important to understand, is that right now there's no competition for the dollar. There's no other currency that can compete against the dollar.
This, in my opinion, is propaganda. Right here. This right here. You've got Bitcoin. You've got American citizens that are sick of the dollar. Me being one. In the sense that the way that they jack around with it, knowing that they're extorting money from us via inflation and taxes to pay for everything else besides stuff in America. So you've got Bitcoin, strong contender. You got whole countries that are shifting away from using the dollar and using Bitcoin. You've got BRICS, strong contender coalitions of people that just don't want to use the dollar. Now, if nobody uses the dollar and all these dominoes start falling, if America and Britain are the only ones who use the dollar for things, then the dollar dominance isn't what it was. Like, this transition is happening, and I think they keep saying stuff like this to act like people are wanting to hold dollars. Like, you can buy 50% less groceries right now. I don't think anybody in their right mind is just sitting on dollars unless you're just transacting in them. I'm going to leave it at that.
which is 100% true. But then Warren Buffett also went on to quantify that by saying that once you let the genie out of the bottle, and in this case, genie is the inflation genie, and people start to lose faith in the currency, it's very hard to put the genie back.
Case in point, appreciate the context. Yes. Genie is definitely out of the bottle.
It's very hard to get that faith back into the bottle. And what that means is if we continue to see very high inflation, that is going to cause people to lose faith in the dollar. And if we see more and more countries distance themselves from the dollar, that is a very bad trend. So yes, today there are no currencies that can compete against the dollar. We are the strongest dollar, we are the strongest military presence, the strongest government, the strongest economy. There's nothing that can compete against the dollar. However, if we continue down the trajectory that we have right now, we could see major changes with the world order in our lifetimes. And this is where Warren Buffett kind of reassured people, hey, we're okay today. But if things keep going down the path that we are right now, it could get worse, and this is where you want to make sure you're protected. And again, being financially educated as well. And then when it came to the topic of AI, let me read you directly what Charlie Munger said, who is...
Hold on, before he reads that, this is the reason that we have to start looking and being understanding and getting back involved. We have to become a populace that is financially literate. We have to become a populace that cares financially. We have to care about what they're doing with our money. We have to care about how they are going about obtaining our money, the clip at which they're taking our money, and then what they're doing with it. It's really important because while we are correct, fine today, if all you're working through is a today mindset, you are going to be crushed in the future because you're not planning ahead. Something to keep in mind.
Warren Buffett's right-hand man. We're going to see a lot more robotics in the world, but he's still skeptical of some of the hype in artificial intelligence. Essentially, what he's saying is you can expect a lot more artificial and...
I'm just going to sum this up quickly. That dude is old, and he don't know how to use ChatGPT. Like, he doesn't understand what's happening. Like, I think he just recently invested in Microsoft, and he's friends with Bill Gates. Like, I've got nothing but smoke for him whenever these guys talk about technology. Like, you're 80 years old, dude. Like, I get it that you don't care. I get it. It doesn't matter. You got the assignment, you completed the assignment, and you won. But like, just don't, like, you don't understand it. Just say that. Why do we have to have opinions on everything? Why can't people be like, you know what? I'm not educated on the topic. I don't understand. I don't know. And then sit down and learn something, get poured into. I understand a lot of you, everybody likes to be the pourer, but sometimes you just got to take in some knowledge and get taught. And that's okay. And with that, we're going to go ahead and drop this down. We're going to close this out with solid 45 minutes. This is good. Okay, guys, I hope, dude, this camera angle is bang. I'm digging this, bro. I like it. I can dim it and make it dark for when I'm screaming at people. It's going to be great. This is good. Might not be buying that camera. I might just be upgrading the laptop. I don't know. Tell me down in the comments, because like, obviously I appreciate all the donations, but I'm not a big waiter. I'm a big doer of things. And while I do appreciate everybody who subscribes and supports the channel, and all of those funds go back into the channel, I got some upgrades, and I'm gonna have to make some upgrades around here too. I gotta pull my weight. So what do you guys think? Do you think I should upgrade the laptop? Because this is a good crispy view. Not gonna lie, like, I like this. This is fine. I can continue doing this, but upgrading the laptop would make my workflow better. Would give me more resources. Also, would be something that I wouldn't have to touch for like another 2 years minimum. For a while, for what I'm doing. So what do you guys think? Hit me down in the comments and let me know that. Also, did you enjoy the video? Hope you guys did. Let me know. Obviously, I do take feedback. There was a point in time when I first started out and I was struggle streaming where I was not on camera. Got some feedback that I needed to show my face. I wanted to see this ugly mug, this medium ugly mug. You guys wanted to see it. Well, here it is. I take feedback. even if it's harsh feedback, like I do acknowledge those things, especially from people that support me and still rock with me, because I know it's hopefully not from a place of hatred, because I don't think I have any YouTube enemies yet. I kind of like everybody. I kind of function like Switzerland. I like talking about money. But yeah, definitely like, share, subscribe, touch base with me down in the comments. Let me know. We'll take a vote on it and let you guys be the judge. Should I upgrade a camera or should I upgrade my laptop? It's going to be one of the two. It's a big ticket purchase. I need to get this done. Like I can go either way with it. I'm kind of 50-50. So you guys tell me what I should do. There's 161 of you out here in the ether. And then anybody who's passing through, you can weigh in and give me your opinion as well. But I think we're going to call it for that. Definitely tap in with us this evening for the Guns and Butter show. I got a bunch of new stuff I've been working on. I worked on being creative while I was sick, and I think I did a good job. So definitely tap into that show. We're going to be changing up where we're streaming. Also, we'll see. So I'm getting pushed to be on Twitch. So we'll see what's going on with that and test it out, see how it goes. But yeah, like, share, subscribe, tap in, touch base with the content. We might do in a few weeks here, we might switch off from the High Value Net stream to test out a Twitch stream just to see if there's any traction over there. I'm just trying to make sure that I'm in spaces that get the best traction. So I get good traction on YouTube. Obviously, that's bread and butter. Love you guys. This is home. Also, getting pretty equal traction over on Rumble. Becoming a new home. So those of you who are over on Rumble, like, shout outs to you. It's interesting. No one chats. Kind of weird. No one's tapping in over there. But you know, it's just starting, so we'll see. I mean, I go over to Tommy's Rumble and everybody's chatting, and it's awesome. But, you know, maybe I'll get there one day. But I think we're going to test out Twitch and see what's going on there. So we might have some on-off weeks where I swap out High Value Net stream for the Twitch stream just to see if we get any traction over there, and then kind of base the two streams that I'm going to do on my channel, because this is my show. Off of what kind of traction we're getting. If I start picking up people on Twitch, then you know what? I'll go get that Twitch back. I ain't scared. I am not scared. But with that said, it's your boy, Reckless Ray Dinero, and I am gonna be out. So, as always, at the end of the show, it's time to get up out of here. So let's go.
Let's go. Let's go. I pull up.